And that, boys, marks the end to another great trading sesh with Herb. Actually, no, it wasn't a great trading sesh. It was a profitable trading sesh. Right now, I'm up $167 on each 4 of my Express accounts, which is the equivalent to a winning day, getting closer and closer and closer to that payout, man. Today I ended up taking 3 trades. First trade was a loss. I got SL rated. Second trade was a win, and third trade was, yeah. I don't even want to talk about the third trade because it wasn't the best of achievements for me, but here it is, man. Here it is. We took 1 trade. At the start, we got completely stop rated and price reversed straight to full take profit. Trade number 2 comes along. Thinking back at it, not because price ended up fizzling out. I probably should have taken off both contracts at previous day low number 2. But here's where it gets bad. When I exited this trade, I was moving my stop loss up and down to the figure at which I would get a consistency day. I ended up tapping my right click instead of my left, and I ended up fucking it up. I had $137 on my RPL. I needed $13 to get another consistency day. It got fucking nervous, man. I was reliant on winning this trade or I was completely fucked. And no, that isn't a good scenario to put yourself in, but I made the ultimate mistake, or I made a pretty silly mistake to even get myself in it, but I ended up just shorting here, scraping in a nice little $32 to get positive on the day. So anyway, draws on liquidity today were absolutely immaculate. Now, convictional wise, it wasn't. Price had all the reason to move to the downside. It was just when it was going to happen. And it was honestly just, how do I state it? Price had very good reason to move to the downside. That's because right now on the charts, we have got a whopping 2 previous month's lows. We've got January's previous month low and December's previous month's low. And internally, we've got yesterday's previous day low and Monday's previous day low. We had every single fucking reason to go to the downside, boys. And naturally, you got to expect in the markets, low-hanging fruit is what drives the markets towards liquidity. Getting stopped out is what drives the markets towards liquidity. Low-hanging fruit is basically just, let's say you've got 2 draws on liquidity, your internal draws on liquidity or your draws of liquidity number 1, and your external draws on liquidity, aka your draws on liquidity number 2. As soon as number 1 is taken, price is naturally, probability-wise, going to go and stop out a bunch of people who have tried to trade towards draw on liquidity number 1 or draw on liquidity number 2. That is exactly what happened today. A lot of market orders got filled around this exact point here. Price sweeps out the low-hanging fruit, does not take all of the liquidity, and ends up stopping out everyone at break even. But anyway, that's just a little concept you've got to learn in the markets. But here we go, man. Looking at the markets on the daily time frame. On the daily time frame, we can see that yesterday we bounced off an inverse for value gap after creating an internal S&T with this high and shot the fuck down. Literally shot the fuck down, and yeah, that was it. We just absolutely dumped yesterday, and the government shutdown kind of has an impact on that, I think, in my judgment, but I'm not putting it all on that. There's good conviction for price to go down this much. But anyway, opening up today, we understood that we have got 2 previous day lows resting below. We've got 2 previous month lows resting below. We've got a 4-hour for value gap. This is like, that for value gap is going to hold. Like, you can put your life on it. That for value gap is going to hold. We have got every single reason to move to the downside. Markets go up in London session. We end up putting in an internal S&T because NQ doesn't take out London high. Yeah, price then ranges to the downside again. Upon market open, price dumps all the way down to almost getting previous day low. But what does it do? It rejects to the upside again, stopping out everyone who entered at this opening gap range. And yeah, this is my exact point again. This is seek and destroy. This is low hanging fruit. People thought that this liquidity would get taken, but it didn't. Everyone who's entering in right here, they're all getting stopped out. Unfortunate, but it's true, man. They're all getting stopped out because they didn't target the right liquidity, or they got a bit too greedy. So markets today were absolute furf, like absolute dog shit. Dog shit, at least up on market open. Today there was going to be PMI news at 3 p.m. Is that a big news event? Nah. Is it going to move the news much? No, but it should move it towards the overarching predetermined draw on liquidity. So understanding that I want to see previous day lows get swept and possibly see previous month's lows get swept. We've got all of the liquidity we need. We just need to find an entry now. Price ends up doing what exactly? Price retraces. It then bounces off the opening gap range. It's showing that bearish order flow is being supported. Bearish price action is being supported because we're holding bearish PD arrays. Price then comes up again, internally sweeping this out. And at this time, we'd already got an S&T put in because ES took that high and NQ did not. Price then comes down again. And by the way, this is another point of interest for today, this 5-minute inverse for value gap. So upon market open, we just absolutely disintegrated it. And then we retraced to it and held. But anyway, 30-second chart, hopefully this isn't boring. Price comes down, shows momentum after stopping out all of the people who had their stop losses at this recent high. I enter in short, stop loss at the recent high here. Now I understand that that was complete, utter tosh and I shouldn't have done it, but you're not going to win every trade. You're not going to do absolutely everything, single thing on the markets right. So unfortunately, I got stopped out. What did that do? That didn't put me off trading. That just gave me even more conviction. That is the internal manipulation we were waiting for in the markets. Markets then drive down again, breaking internal 30-second structure. At this point, I'm just like, cool. We're just going to hop in shorts, stop loss at an internal high, take profit at these lows. Nice little 1 to 2 we got here. Should I have taken it all off at that low? Yes, but I left it because I wanted to leave it. So yeah, price ends up coming down, stopping out all of the people who went break even too early. Obviously that's not me because I understand how the markets work. And yeah, as soon as this low got printed again, stop loss to break even, take one partial off at previous day low, leave one runner off till previous month's low. And yeah, unfortunately, we had a bit of a fuckery. I got a bit emotional. I got a bit attached to the profits, and that's why I pulled the trade here. Because look, I mean, it was an absolutely incredible setup here. Even one that's performing right now. This setup will probably just sink to the bottom because it's got all of the reason to go to the downside now. It's had all of the manipulation legs in the markets. It's holding bearish structure. It's got the amount of liquidity it needs internally and externally to move down. So, whew, that was a little speed run talking. But anyway, that's it for today, man. We've got a total profit 106.7. But yeah, hopefully you enjoyed the video. Hopefully you learned something from it, and I will see you tomorrow.